ARMs and Airbnb. So adjustable rate mortgages, are you seeing people pick those more now that a lot of people think we're near the top as far as where...
Bottom or not, it does seem to be stabilizing. We do seem to be seeing some green shoots. What are you seeing on the ground across the U.S. in your different markets?
So across the board, there are more buyers.
You've heard it repeatedly now. Media outlets, economists, knowledgeable observers, and analysts, including us, have been sounding the same alarm for many months now. 2023 bears plenty of economic uncertainties, and something will break soon. And the focus has been on the housing sector, whose date with destiny is drawing ever so much closer as the days go by. In general, the housing market hasn't been looking good for months, despite the flowery figures flying around. When you have people like Dave Burt, CEO of Delta Terra, an investment research firm, speaking out loudly about the danger lurking in the shadows of the market, you better listen. Burt is one of the lone voices that called the housing market crisis that precipitated the 2007-2008 global financial crisis. Although his angle today is that of the market mispricing climate change, his warning points to something similar to what this video is all about: the coming housing crash. But our angle is different. There is a fire starting in the Airbnb market, and when it gets large enough, the whole housing market will be reduced to ashes at record speed. A housing bubble requires 3 elements, claims Lance Lambert. First, speculation boosts high-spirited demand. Second, home prices skyrocket and travel well beyond fair prices and above what household incomes can support. Lastly, the house of cards crumbles and prices come tumbling down. But home prices are still rising nationwide, giving some analysts sufficient firepower to argue that a crash won't come soon. They also cite the tight inventory, which they say will hold the market firm until it corrects without hurting anyone. Or will it? We all know that foreclosures are rising sharply. If you're not in on the trend yet, check out this report by Adam, which reveals that properties with foreclosure listings increased by 7% in May 2023 compared to the previous month. To Rob Barber, Adam's CEO, the recent increase in foreclosure filings nationwide indicates a trend that has been observed throughout the year. In fact, foreclosures have gone up for about 26 months back to back, and consequently, a new type of seller is emerging in markets like Phoenix, Arizona. And that's Airbnb owners. Curious why? Well, pull up the chair and listen closely, because I will share startling figures that should alert you to a brewing crisis that could result in an Airbnb bust sooner rather than later. But before we go any further, please support our channel with a thumbs up and don't forget to subscribe. Also, stay with me to the end, because I will share some tips to help you escape the madness that may be upon many in the wake of an Airbnb property fire sale. The short-term rental market is coming off good times that may never return. Airbnb owners are part of the real estate economy. The original business model was to rent out underutilized or extra home space to travelers needing a temporary accommodation. Think of it as an amateur version of the hotel business. The short-term rental business evolved into a formal business a few years after Nathan Bycharczyk, Joe Gebbia, and Brian Chesky founded Airbnb. Airbnb and other short-term rental platforms created a two-sided marketplace where hosts and guests connect. The owners set their own house rules, availability, and prices, and communicate with guests and manage their own listings. However, some entrepreneurs saw an opportunity and started businesses to help owners manage Airbnb properties. Airbnb expanded so fast that as of September 2019, it recorded over 7 million listings across over 100,000 cities. But then the pandemic hit. 2 months into the global pandemic, reports emerged that many Airbnb owners were under pressure to sell. The restrictions on movement in many parts of the world, including the United States, had dealt a death blow to the short-term rental business model. Amy Offield, an Airbnb owner in Galveston, Texas, told CNN that she lost almost everything only 3 months after the pandemic was declared a global health crisis. CNN used Amy and other owners' experiences to speculate about the imminent collapse of the short-term rental sector. But that didn't happen. Instead, the market bounced back, launching into a bubble that is about to pop at any moment. Activity tanked in 2020 from the previous year. For example, nights and experiences booked with Airbnb almost halved to 193.2 million in 2020 from a record peak of 326.9 million in 2019. But as the government stepped up to backstop liquidity, activity rushed back like a tsunami, taking the nights and experienced bookings to a new peak of 393.7 million in 2022. However, it appears the Airbnb masterclass post-pandemic pandemic has run out of gas, and Airbnb owners are back with a massive inventory of housing units. A tweet on October 16, 2022, entrenched the Airbnb bust debate. Amy Nixon, a DFW housing and macroeconomic analyst, tweeted a screenshot of an Airbnb superhost lamenting the death of bookings. The business had gone from at least 50% occupancy to literally 0% in the 2 months leading to October, the superhost moaned. Interestingly, the tweet was a reflection of more things to come because the second half of 2022 was brutal for the short-term rental market. A report by AirDNA Research, the research arm of a leading data and analytics provider focused on the short-term rental industry, released in December last year, pointed the spotlight to declining occupancy rates in the market. The broader context behind this fall in occupancy goes back to the unprecedented explosion of short-term rental demand that occurred in 2021. Says the report. AirDNA forecasted that the occupancy rate would drop again in 2023 to 56.4%, although the firm revised the forecast occupancy rate to 57.6% in a follow-up report released in mid-June 2023. There is mounting evidence that Airbnb owners are about to sell. Reasons a sell-off is in the works. Reason 1, declining Airbnb revenues. Let's take a moment and explore how Airbnb generates revenue. The San Francisco-based company's primary revenue source is the service fees charged to hosts and guests for each booking made on its platform, typically ranging from 3% to 20% of the transaction value. Other avenues the company earns revenue from include experiences, Airbnb Plus, Airbnb Luxe, and Hotel Tonight. However, the service charge is one of the primary sources of revenue. Because of this, recent reports revealing declining Airbnb revenues are something to worry about. A recent analysis shows that Airbnb's revenue has reduced by nearly 50% in cities like Austin, Texas, and Phoenix, Arizona. This massive earnings drop is a sign of an unfolding crisis that the company is experiencing. If Airbnb is feeling the pinch, it means some hosts are barely surviving. Unfortunately, this is not the time for homeowners to barely survive given the tough mortgage market. For instance, the current average 30-year fixed mortgage rate is 6.67%, a rate last seen on the eve of the Great Recession. Now imagine the scenario where the rate keeps rising and occupancy rates, as explored earlier, keep falling. In that case, most Airbnb owners will find it more challenging to cover their mortgage payments and other expenses, forcing them to sell and let go of their property. Reason 2, pessimism in the U.S. economy rising. Like most markets, the housing market can conflagrate as long as enough sparks are produced. There is always fuel to burn. Simply put, although there appear to be strong fundamentals in the short-term rental market, there is enough stress to launch it into a tailspin if sufficient strain is applied. For example, the recent 2023 short-term rental mid-year outlook by AirDNA shows better than expected demand in the short-term rental market. This comes on the back of unrelenting enthusiasm for travel among domestic and foreign tourists, but the demand growth is nothing to celebrate, at least for the long term, because the economy may enter a recession soon. According to HSBC Asset Management, the United States will enter a recession in the last 3 months of 2023, although the signs may begin showing as early as this month. If and when the downturn happens, HSBC expects the U.S. and other Western economies to suffer irreparable damage because markets do not appear to be pricing a particularly pessimistic view of the world. Otherwise stated, if investors, including Airbnb owners, realized how bad the situation is, they would wish they had exited many assets when it was profitable to do so. But that doesn't seem likely in the coming months. As such, we are likely to see a mad dash to dump houses in the near future, especially after the market starts pricing in the pessimistic view HSBC suggests, releasing massive inventory in the broader U.S. housing market. Reason 3. Too many Airbnbs in key markets. A short-term rental market crisis can start from anywhere if the right conditions are in place. On the whole, as we have seen previously, the market is buoyant, and no wave seems strong enough to capsize the boat. But data shows that some markets are struggling. Dense urban areas and vacation destinations are piling up inventory. For instance, All the Rooms data indicates that a cluster of 4 short-term rental pockets in Phoenix, Arizona suffers from an incurable glut: Tempe, Paradise Valley, Scottsdale, and downtown Phoenix. These areas consist of at least 65% of Maricopa County's Airbnb listings, and if a sell-off were to begin, it would receive the hardest hit. Another area with an alarming supply ratio of listings is Travis County in Austin, Texas, with a 2.3x supply ratio. This is a sustainable supply ratio, meaning the county is ripe to set off a conflagration in the broader short-term rental market. In Scottsdale, Arizona, some Airbnb owners lament unbeatable competition from nearby Airbnbs managed by management companies. For example, Marlene Mousseau told Arizona's Family, a CBS affiliate, that Airbnbs managed by agencies are more aggressive and have set off a race to the bottom where owners like her cannot participate. It is possible that owners in the same situation as Mousseau exist in hundreds, if not thousands, but have not been captured in official datasets. The problem is that when they start going down, their sell-off will be enough to roll dominoes across the entire industry, and it will be brutal. What can you do to escape the madness that could unfold if a fire sale grips the short-term rental market? Do thorough market research and compare the demand, supply, occupancy rate, and average nightly rate of Airbnb properties in your target area if you want to buy property. You can use tools like AirDNA or All the Rooms to get data and analytics on short-term rental performance. Be prepared for market fluctuations and potential revenue drops due to seasonality and competition. Airbnb rental revenues have plunged in some parts of the United States, so you need a contingency plan or a backup source of income in case of emergencies. Consider the pros and cons of selling your Airbnb property if you decide to exit the market. You may be able to sell your property for a higher price if it has a good track record and positive reviews. Still, you may also face some challenges, like completing all bookings, transferring the listing, or finding a buyer interested in short-term rentals. If you found this information useful, please show appreciation by clicking the thumbs up button and subscribing. Please comment below with your valuable insights and thoughts, and do not forget to share the video with your loved ones. Thanks for watching, and watch this one next.